A pivotal decision. The Federal Reserve made a significant decision this week. They decided to keep interest rates unchanged. This decision came after 3 consecutive rate cuts in late 2024. The move has major implications for investors. It signals the Fed's stance on the economy's health. It also suggests their outlook on inflation. This decision is being closely watched by Wall Street. The market is eager for signs about future Fed moves. The Fed's actions influence borrowing costs. These costs affect businesses and consumers alike. Understanding the Fed's decision is crucial for anyone invested in the market. The Fed's decision reflects the delicate balancing act they face. They aim to support economic growth. They also strive to keep inflation in check. The current economic climate presents a unique challenge. The Fed must navigate global uncertainties. They must also contend with domestic political pressures. This recent decision highlights the Fed's commitment to its mandate. They are focused on price stability and maximum employment. The decision to hold rates steady suggests confidence in the U.S. economy. However, it also acknowledges the need for caution in the face of potential risks. President Trump has been vocal about his desire for lower interest rates. He has repeatedly criticized the Fed for not cutting rates more aggressively. He argues that lower rates would further boost the economy. Trump's pressure on the Fed has raised concerns about its independence. The Fed is designed to be independent of political influence. This independence allows them to make decisions based on economic data, not political expediency. Trump's attempts to influence the Fed threaten this independence. Such interference could undermine the Fed's credibility. Despite the pressure, the Fed has maintained that its decisions are driven by data. They cite inflation as a key factor in their decision to hold rates steady. They point to the strong labor market and steady economic growth as evidence that rate cuts are not immediately necessary. The Fed's resolve in the face of political pressure is crucial. It underscores their commitment to their mandate. It also reinforces the importance of an independent central bank. This independence is vital for long-term economic stability. It ensures that monetary policy is not swayed by short-term political considerations. To understand the Fed's decision, it's essential to look at the economic data. Inflation has been a primary concern for the Fed. While inflation has picked up recently, it remains below the Fed's 2% target. This suggests there is still room for the economy to grow without sparking excessive inflation. The labor market is another crucial indicator. The unemployment rate remains near historic lows. This signals a strong labor market with businesses actively hiring. Wage growth has also been steady. These factors indicate a healthy economy that can sustain current interest rates. The Fed also considers global economic conditions. Trade tensions and slowing global growth have posed risks to the U.S. economy. The Fed acknowledges these risks. However, they believe the U.S. economy remains resilient. The Fed's decision to hold rates steady is based on a careful analysis of these economic indicators. They are signaling their confidence in the U.S. economy's current trajectory. They also demonstrate their commitment to keeping inflation under control. While the Fed held rates steady this time, the future remains uncertain. Investors should pay close attention to upcoming economic data. Inflation will be a key factor to watch. If inflation rises faster than expected, the Fed may be more inclined to raise rates to keep it in check. Global economic conditions will also play a role. Trade tensions and geopolitical events can impact the U.S. economy. Investors should monitor these developments and their potential impact on U.S. economic growth. Furthermore, President Trump's actions and rhetoric will continue to be a source of uncertainty. His pronouncements on trade and other economic policies can create volatility in the markets. Investors should be prepared for potential market fluctuations driven by political events. The Fed's next meeting will be crucial. Investors will be looking for clues about the Fed's future policy path. Pay attention to the Fed's statements and economic projections. These insights will provide valuable guidance for navigating the uncertain economic waters ahead.